Welcome everyone to the beginners room we meet today. It's what Friday, and today we are looking at patterns trading. So whether you're joining me on YouTube or you're joining me in the beginners room of XM, we are going to be looking at the market together. And if you do see patterns that you want to talk about, you want me to explain to you, please do well to use the chat box wherever you're joining from. Just use the chat and ask your question. If there's a chart you would like me to analyze so that maybe we can see patterns there together, do well to use the chat box also. I'm here ready to look at them with you and answer your questions. I have opened the chart of CHF yen and I'm already seeing some patterns here. This pattern become easy with time as you practice. So for me, it is easier for me now to easily see these patterns and to be able to identify them because I practice patterns trading regularly. I trade patterns all the time. For you, if you're entirely new to patterns trading, it may be difficult. I may ask you, what pattern can you see here? And you're not even seeing any pattern. Not to worry, you will be able to do this as you look into the market with us, as you join our sessions regularly to learn how to do trading the right way. So when we talk about patterns, what are pattern trading? What does it involve to trade with pattern? In the market, as prices move in waves. We hear this all the time, the price move in waves. You will not see just one straight line and the candle just become all the way and it goes straight up. At the point it will change direction. If you'd observe, you would see we had here multiple bearish candle falling. But what happened in between? A green candle comes in, indicating that some buyers were trying to outnumber the sellers at that point. And then it fell again and it started to move to the upside. It moved up, retraced, the sellers came in, the price pushed down again, pushed up, retraced, like that. So we have multiple waves, multiple all sort of movement in the market. But as these prices are moving, as the candles are forming, there are also shapes that are discoverable on this chart while the prices are moving. You would see here the price pushed down like this and it formed a sort of pattern. If you look at it very well, you can give it a name and say, okay, this looks like a channel. Or when you take it with this place as it moves up like this, say, oh, this is a flag. It looks like a flag. So you would start observing shapes and symbols that can represent something in the real world, and that will give you an idea what is happening in the market. Well, that's what pattern does. And as humans, we know that we learn more visually. We are visual learners. We learn with what we can see more than what we hear or what we even read. So if I am reading, I can see what I am reading. But if there is a way for me to think deeper about it, have a visual representation of what is being described, it is easy for me to remember that thing than when I am just being told, oh, something, so someone is describing and describing for me. I just need to see one image to know exactly what this person is describing. And that is what pattern does. It gives you idea of what the price is doing through these patterns that are forming. So I look at this place and I see this. It gives me an idea that the price wants to continue to the upside. So let's assume that we are here when that pattern formed. So while it is forming, I notice, okay, this has gone up like this and it starts to go down. So I put this lines to identify that pattern. And at some point, I observe that the price has closed above it. All right. So when I see that close above, what am I looking to do? Let me erase this. So if I see the close like this bullish candle, I may enter. I do a buy there, stop loss here. What happened later? Price began to move to the upside. Price started to push bullish. It started to go up. I can also use this measurement of the pole of that bullish flag to measure what my take profit is going to be. And I'll place it from the lower part of this, and my take profit will be here. And did the price get there? It did. So if I had entered here, stop loss here, price did get to my take profit, and I would have been able to make some good profits just trading that. Just being able to identify this pattern would give me good profit in the market. So this is 1,180 pips, or 181, and this is like 60, about 70 pips. So that's close to 3 reward to 1 risk ratio just for identifying the pattern. And when I have 3 reward to 1 risk ratio, what does that mean? If I'm risking $100 on this trade, I probably would have like $300 when it hits my take profit. How? Just because I'm able to identify a simple pattern like this. So patterns are quite important aspect of trading the charts. If you are a technical trader, it is like the foundation. Chart patterns are like the foundation of technical analysis. So you want to be able to identify the patterns as you navigate the different charts, the different markets that you trade. Interesting thing with chart pattern is that you can trade them everywhere, whether you're looking at stock trading, you're looking at cryptocurrency, whatever you're trading, forex, commodities, everywhere you can use chart patterns. So just being able to understand them will go a long way in helping you do trading the right way. Let me bring out the slides to also show you better what I am talking about. So patterns are divided into different forms. We have reversal pattern and we have continuation pattern. Reversal pattern are telling you that a trend is about to change. So say that we have an uptrending market like this. The price has been trending to the upside. And then you have a reversal pattern. What is that showing me? That the price is about to move away from the up into a downtrend. And the reversal pattern can be like this, head and shoulders. So this pattern is called head and shoulders. It's a bearish reversal pattern. It's usually indicate that an uptrend is going to change into a downtrend. So as I see this pattern and I see that there is already changing characteristic of the trend, in an uptrend, I want to see higher highs and higher lows. But now I am seeing lower lows. Lower low has now formed because the close below this level is going to show me a low that is lower than the last. And then this high here is lower than the high before it. What does that show? A new high that is lower, a lower high. So having lower high and then coming to have lower low is signifying change in the characteristic of the trend, all right? It shows that there's a change in the direction of the market. And of course, in that case, I will be looking for sell idea. I'll be looking to find sell opportunity in the markets, okay? So that's what the reversal pattern is. How about continuation pattern? Continuation pattern is telling you that a trend is going to continue in the same established direction. So if you are analyzing the market and there is a downtrend, all right, the market is trending down, and then you start to see this kind of movements. This movement now, it forms this way, this pattern from here down, and then this formation is called a bearish flag pattern. What will I be waiting for? A breakout below this level. So say I see a candlestick pattern below this level like this after this formation. What does that tell me? That this is going to continue to the downside, that it's going to be bearish. And there's already established downtrend because we have lower low, lower high, lower low, lower high. So indicating that we are in a downtrend. And with this new pattern, what am I looking to do? Sell. Selling in continuation of the established downtrend. That's basically it. So that is what a continuation pattern is. And what this shows me is that I can find trade from time to time by recognizing patterns, knowing how to identify the patterns that I see in the market, whether they are continuation pattern or they are reversal pattern. Some patterns are also bilateral. They work as reversal pattern, and they can also work as continuation pattern. But in any case, whether they work both ways, at least at the time we're seeing them, they are telling us one story. This is reversing the market to the upside or to the downside, or this is continuing the trend that we already have, whether up or downtrend. Okay. So identifying the kind of pattern you see in the market, knowing how to trade them will go a long way in helping you make valid and informed trading decisions in the market. This is flag. We have some flag pattern, we have pennant pattern, we have wedge pattern. These are different patterns that give us idea of market continuation of the trend. This one though can serve as both bilateral, as both continuation pattern and reversal pattern, whichever one you find. They are all giving you idea that the trend is going to continue. Okay. Right? So the pattern are suitable, continuation pattern are usually suitable for long-term, short-term trading opportunity. They give you a there that this trend, yes, is established. Yes, it might be getting toward the resistance and maybe a change is going to happen. But for now, there is a continuation pattern that shows that the trend is going to change, the trend is going to continue. So the trend may be continue even if it's not going to last long. So in that case, if I see it, I look more for a trade that I am not going to be holding for too long. It gives you opportunity for entry to join the trend. So if, say, there is established trend already, the price has already been in an uptrend for some times, it's established to be an uptrend. If I see a continuation pattern, it gives me idea that this trend is going to continue. So I can join the people that are already buying, I join the buyers. If I see a downtrending market and I'm looking to join the trend, there are already sellers in the market pushing the price down, I would be joining them to continue the trend. So it gives you an opportunity to join. Because if I come into the market and I see established trend already, for instance, like this one, I'm looking at it and I see that, oh, the trend has been bullish for some times. When do I now enter? If I am able to identify a pattern there that is a continuation pattern and shows me that the trend will continue to be bullish, then I may say, okay, interesting. I am going to be looking to enter and do a buy as well. Okay. And I'm in fact looking at it now, and I think that there may be an opportunity for me to join the buyers as I expect the price to continue to the upside for some times. So looking at this from the 1 hour time frame, there is a double bottom pattern. So I'm looking that the price would retrace for some times. There's this double bottom. That's a reversal pattern, but of course we have a small bearish move before that happens. So this is confirming that this is changing from this small bearish wave into an uptrend. That's why we have this bearish double bottom. The price has broken above now. It is coming down. I think it will retrace for some times and then continue to the upside again. So what I'll do here is I'll set it as a pending order. I think that the price has a lot of possibility of moving higher. So I think it might get toward this level, and my stop loss in that case will be below this level. Let me see where it has potential of getting to. I expect it to get all the way here, but let's assume it even gets here. Let's see if it's going to give me 2 rewards to 1 risk ratio at least. 46 and over 100. Interesting. So this will be expecting it to retrace for a while. So I do 100 pip stop loss. Let's calculate our pip value. I'll be setting it as pending order. So I want to calculate the pip value so that I can take the trade, set the pending order.